It's Friday, January 14th, 2022. Again, another mind-blowing day today on Wall Street in this economy. Before we start, I want to give everybody a big thank you. I received this last week, and I want to share it with you. This came from YouTube, and I'm not sure if that's focusing. Hopefully it is. The silver plaque for acquiring over 100,000 subscribers. And I want to thank everybody out there that has subscribed to the channel. YouTube reached out to me about 3 weeks ago and asked me if I wanted to accept one of these silver plaques. I said, sure. And they said, okay, well, we just have to verify that your subs are legit, because there's a lot of channels out there, I guess, that buy subs and they buy views and they buy comments. And so, as I've said in the past, I will only grow this channel organically. I'm not one of these people to buy subs, to buy views, to buy comments, just to try and grow a channel to see how big I can get it to grow. It grows organically, and that can only happen because of you. So again, I want to thank you for this. This could not have happened without you, and it's an honor. But you didn't tune in today to watch me hold a silver plaque. You tuned in today because we need to talk about what's happening in the real world. There are much more important things happening than me getting a silver plaque. And we're going to get right into it and start with this. Dow Jones drops 200 points today on Friday. Dow Jones was down 450 points earlier today, turned around, closes down only 200 points. Markets across the board were up except for the Dow. But why was the Dow down? Well, bank stocks got hit. And, you know, when we see the amount of people who filed first-time jobless claims last week, and we got that information yesterday, and if you get a chance, please go to my video yesterday. We were down in Long Beach at the port, and it was just mind-blowing with the amount, the hundreds of thousands of containers parked down in Long Beach. The 125 plus cargo ships and tankers down floating around off the west coast here, down in Long Beach, San Pedro. Just mind-blowing. So if you get a chance, go to yesterday's video. It is really unbelievable. But getting back to today, JP Morgan shares fell more than 6%. Citigroup stocks fell 1.3% with a 26% decline in profits. Again, with the job news we got yesterday, with the millions of people quitting their jobs, the news we got today with the banks, these markets, the Dow Jones shouldn't have fallen 201 points. It should have fallen over 2,000 points. It should have absolutely crashed today. I don't know what it's going to take to crash these markets. They are so manipulated, so fake. And today was just another prime example of how manipulated, how fake they were. Did they get the plunge protection team into these markets today to keep them up? Dow Jones was the only one down, and it should have been down a lot more. But they seem to resuscitate these markets whenever they need to. You know, we hear how safe the banks are and how well they pass these stress tests with flying colors. But how safe are the banks? How healthy are the banks? You know, they tell us that the consumer's never been better off. The consumer's never been stronger. And they're telling us the same thing with the banks. You know the consumer's in big trouble. And I think we're beginning to realize that these banks and all these stress tests, which mean absolutely nothing. I think these banks are in much worse shape than many people want to believe. So be very, very cautious with keeping all your money in the banks, ladies and gentlemen. Heaven forbid we ever see a bail-in. Heaven forbid we see more bailouts. But the bailouts are continuing. That's why these markets continue to go up. An article today on the hedge, and I pulled these articles out today, nothing in order, but they seemed important that we should be talking about them. And I think that this information is very, very critical. because when we absorb knowledge like this, when we open our minds to what's really happening, it makes us concerned, right? It makes us worry a little bit, scares us a little bit, and that makes us take action. That makes us prepare. BlackRock's asset top 10 trillion on biggest quarterly inflow since 2015. So BlackRock's assets now top $10 trillion. And it's good to see that they're benefiting from the $7 trillion that the government pumped in to the markets and into the economy. Remember, it stayed at the very top of the pyramid. It did not trickle down to you or I. For the most part, it didn't trickle down to small business. It stayed, most of it stayed at the very, very top. BlackRock, they're going to own a lot more when these markets do crash. And who knows, these markets this may be purposely done. We keep hearing the Fed's going to raise rates, and a lot of people say that could never happen. It's going to be very minimal. They'll never raise rates. They'll never tighten up the balance sheet. They'll never stop QE. But what if they do? And what if they do it on purpose? And what if the goal is to smash these markets into a million pieces so companies like BlackRock can come in and scoop it all up? In fact, I think that companies like BlackRock, Blackstone, the Vanguards, these massive hedge funds, these big banks, I think that they can't wait for things to collapse. Remember, they get bailed out. You and I don't. So they're not going to be too worried. But I think that they can't wait for things to get smashed down, because they're going to come in to suburban America and buy up your neighborhoods. That's what they're waiting to do. I think that they can't wait enough to come into your neighborhoods and buy them up. And maybe if you're lucky, maybe you'll be able to rent your house back from a company like BlackRock. Treasury yields spike after Jamie Dimon forecasts 6 or 7 rate hikes. I don't know what Jamie Dimon is thinking. Does he know something that we don't? Is he just trying to just kind of scare the markets? I don't know. But he said that today. He said that today, that we could see 6 or 7 rate hikes in 2022. I don't know. Is that 0.15? Is that 0.25? Is it, what is it? Again, there's two sides of this coin. Either they're going to aggressively raise rates and cut off all the QE and start shortening up the balance sheet, or we're going to see a few rate hikes, very minimal. It's not going to do anything. It probably will shake the markets, but it's not going to do anything in regards to the inflation. It's not going to do anything to help you. In fact, it will make things worse. They need to get aggressive. I don't know what they're waiting for. They're talking March, April. What are we waiting for? Rates need to start increasing now. And the only people who don't want them to increase are the people who are gambling in these markets, because they know what it's going to do to the markets. There's no way we can continue doing what we're doing, printing money, having the Fed buying treasury bonds and mortgage-backed securities and buying God knows what in these markets, and printing tons and tons of money, creating massive amounts of debt. There's no way we can continue doing this. This is a recipe for disaster, and we're already beginning to see the repercussions of all this money printing. There's just so much money out there and so few products, and prices added with the supply chain disaster and these shortages. This can get really, really out of control. Now everybody is beginning to see shortages at the grocery store. U.S. retail sales tumble most since February as web revenues crash. They're going to continue to tumble, ladies and gentlemen. December plunged 1.9% month over month. November was revised weaker. People are going to have less money. And with less money means that they're going to be more cautious with what they're buying. They're going to be buying essentials versus non-essentials. So maybe people now will have to, buy food, buy toilet paper, buy essentials. Versus buying the big screen TV at Walmart. So there is no doubt we're seeing people now becoming more dependent on the credit cards. Credit card debt is absolutely skyrocketing. Let me repeat. Credit card debt is skyrocketing. Why is that? If things were so great, if the economy was booming, why are people turning to credit cards? because they're going into survival mode. Here's another one today on CNBC. Thieves target another source for stolen goods, delivery trucks and trains full of packages. In this article, video and pics of empty boxes along railroad tracks in Los Angeles. It showed all these empty boxes along the railroad tracks next to these trains. Empty boxes everywhere. This after thieves broke into Union Pacific cargo trains. This is unbelievable. Where are we living, ladies and gentlemen? The mentality of people today, the social disaster that we're witnessing, the social meltdown. It's a social meltdown. They're robbing trains and delivery trucks. And it's really sad to see. But how bad does this get when things really, really get bad? These are the good times, let's face it. Technically, nothing really, really bad has happened yet. But what happens when it does? What happens to the trains? What happens to the delivery trucks, the delivery drivers? How bad could this get? How bad could this really get if we're seeing this right now? Crime is absolutely soaring throughout the nation. You name the crime, it's up in double digits. And now thieves targeting trains, Union Pacific cargo trains, just unbelievable. Just broken into and boxes everywhere. So things could get very, very, very dangerous, ladies and gentlemen. And this is, again, why the number one asset. I talk to people daily. They have the gold, they have the silver, they have the emergency food, they have the mindset. They've got all the bases covered except one, security. Think about that. You got nothing. You don't have nothing without security. All right. Absolutely, you've got absolutely nothing without it. So make sure that you get your security situated. I cannot expand on that enough. Mike Pinto warns the fiscal and monetary cliffs have arrived. He is president and founder of Pinto Portfolio and Strategies. He was interviewed in this article on the hedge. And they made a note in this article that 334 companies on the New York Stock Exchange recently hit a 52-week low. That's happened only 3 times in history, and this all happened in December. Mike Pinto says Powell cannot be content with just ending QE, not with CPI running at 6.8%. Therefore, very soon after QE is terminated, interest rates are headed higher, and the Fed's balance sheet must start shrinking. This, according to Mike Pinto. I've seen him on many, many interviews. Really smart, passionate guy, and he talked about interest rates going up for a while. He talked about the Fed getting more aggressive, and there's 2 sides to this. Many people saying the Fed's going to do absolutely nothing. If they do something, it'll be very minimal. And some people saying that the Fed is going to get very aggressive. 25 basis points here and there won't cut it, he says. Jerome Powell has to hike rates by 680 basis points just to get a 0% real Fed's fund rate. Powell doesn't intend to do that because he is aware it would collapse the artificial market before he gets anywhere close to that. The point here, Mike Pinto says, the FOMC has lost the luxury of being able to delay and dither as it has in the past because now inflation is running at a 40-year high. Hence, the Fed will need to raise rates rather aggressively until inflation, the economy, or asset prices come crashing down. Likely, he says, all 3 will happen simultaneously. So you can check out that article. I just wanted to just give you a couple of the highlights of that article. He believes that the Fed is going to get somewhat aggressive. And again, if we don't get rates over the rate of inflation, it's going to be a disaster. My biggest concern is this. They begin to raise, markets implode, and then they reverse course, bring in the quantitative easing again. drop interest rates again. At this point, you, I, and the world will know that the Fed has lost all control. And at that point, you are on your own. Last article coming from The Hedge today, massive hack of Ukrainian government sites believed part of Russian sabotage operations. We are seeing this literally daily, these cyber attacks happening daily. And we're going to see more of it happening here. Many of you have written me. I talked about it last week. One of the banks I deal with, technical issues. They could not even open 4 days. I don't even know if they're even open at this point. Technical issues. We're always told it's glitches, technical issues, but we do know there's so many reports of all these cyber attacks, literally daily. Crypto stolen, literally daily. Government entities broken into, corporations broken into, people's personal accounts broken into, banks broken into. I mean, are you really safe having all your money in a bank, digits on a computer screen? Is your money really safe when all you're dealing with is electronic money? When you're just paying A, B, and C electronically, and all your money is sitting on a computer screen? Is it really that safe? And I really believe that as we see more of these sort of attacks, that people are going to wake up one day and they're going to be wiped out. And how long will it take for you to get your money back? Will you get your money back? We are really entering the unknown here. There is so much technology out there, and people are so trusting of the banks and the system, and so trusting of the technology. Me personally, I always go back to believing that if you don't hold it, you don't own it. You are responsible for you. When there is an emergency and the lights go out and the system goes down, do you have the assets? Do you have the cash to survive? Do you have the mindset? Do you have the security? These are all things we all need to be thinking about on a daily basis. But if that computer screen shuts down, if that piece of plastic doesn't work, if you go to your ATM and it's out of money or it's just out of service, if you pull on the bank doors and they're locked, as I have done many times, and many of you have had the same experience. Somebody wrote me last week, said their bank is permanently closed. They went there, it's done, gone, permanently closed. They have to drive 60 miles. They live in a small town. They had to drive 60 miles to the next bank. So just imagine the inconvenience you could be put in temporarily, maybe a couple days, a couple weeks, maybe a month. Or think of the other scenario of bail-ins. Banks are going to look out for themselves, ladies and gentlemen. That's the pure, simple truth. They do not have your best interests at heart. If things really get dicey, they are going to take your money, because as soon as you deposit your so-called money into the bank, it is now technically their money, and they're going to loan it out $100 times, or $100 for every dollar, $1,000 per every dollar, maybe even unlimited now. Nobody even knows. They're lending out so much money. It's incredible. Is it 1,000 to 1 now? Who knows? But most people don't realize that these banks don't even carry that much cash in the vault. That if there was ever a run and a line at that bank to cash, for people to get their cash out, those banks don't have enough cash. You know as well as I do, if you want to pull $4,000 or $5,000, many banks don't have that kind of money. They won't give it to you. You have to make an appointment. You have to order that money and then come in when they have the money there. Most banks will not give you $4,000 or $5,000 cash. Some will, some won't. But what if you want to go in and get 20, 30, 40, 50,000 of your dollars out of the bank? Ain't going to happen. It's not going to happen. And imagine things get really, really scary and there's 100 people in line at a bank starting to cash out. What if that line goes to 200, 300? Those banks don't have the cash. This is why you have to be your own bank, your own central bank. This is why you also shouldn't just be in dollars. I don't give financial advice, but me personally, I'm putting it in gold and silver, especially gold, and I'm just being diversified with gold, silver, and cash right now. So just something to think about. But, just reading articles like this, if a government can be cyber attacked, your bank, our financial institutions, our stock market can be attacked and it can be shut down. And if that happens, you're on your own, ladies and gentlemen. So I'm going to leave it there on this beautiful late Friday afternoon. Have an incredible weekend. It's a beautiful weekend to go out and prepare a little bit. Maybe go buy some canned food. Maybe go buy some extra water. Maybe go buy a little extra security. Maybe get out and get a good workout in. Take care of the mind, body, and soul, and your finances, ladies and gentlemen. This is 2022. I don't know about you, but this is really going to be a very, very wild, wild year. And we're already seeing so much volatility in these markets. The news is not good. The outlook is not good. Expect inflation to get worse, ladies and gentlemen. Expect your wages and your salaries to really, really get hit this year. Are you prepared? Are you ready for the worst case scenario? Talk to all of you soon.